Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, and let's figure out what happened today, because today was quite a day to say the least. So yeah, as usual, if you enjoyed the video, don't forget to hit that like button, as it does help a lot. This is not financial advice. I'm not a financial advisor. And of course, my membership section on YouTube is live. The link is down below. If you're interested, of course, where I post intraday updates, post thoughts, technical analysis, options flow on Tesla throughout the day as it's trading. So if you're interested, definitely check it out. I also posted Disney today here. Disney's looking not too shabby right now. So anyway, if you're interested, link below, just $2.99 a month. But let's just jump right into it. Tesla, pretty bad day, closing the day down just over 7% on the day, back to $188.13, which compared to the market is, well, a little bit of an underperformance. I think we can agree on. Now, let's talk about what this actually means, right? Is it all over? Is it not over? Is there hope for bulls? What's the deal here, right? What's the deal here? So let's talk about it, right? So first and foremost, we were talking about forever, right? For a long time that we had a potential bear wedge, and if that breaks to the north side, a bear channel, right? But the first, of course, thing that we were looking at, until obviously proven otherwise, is, well, this bear wedge. And I think we can pretty much agree that the bear wedge, yeah, it broke it down today. I think that is kind of self-explanatory, right? Back below the 21 EMA, back below the wedge, back below $200, and even below $190. So there's a substantial weakness. Now, before we continue on, if you're curious as to why, in terms of the news side, I did also post it to my members, but essentially there's two reasons. One, from what I understand, Jay Powell, there was I believe like an interview or something like that, or he was speaking, and it was either him or someone else, but pretty much there was a message relayed across saying how rates can stay pretty much not like uncut, if you will, for longer, but also how the first cut, like let's say in June, for instance, might be followed by a pause. So it'd be a cut, pause, and then maybe cut, for instance, as opposed to what the market's expecting as well, cut. So the market is, a little bit unhappy about that for the most part. On top of that, and this is probably the one that really affected Tesla more, is the Chinese numbers, right? The China numbers for Tesla came out, and they came in quite weak. But a lot of people are forgetting that, well, as you can see in this post that I linked right here, Chinese New Year obviously happened in China, and it happened a decent amount later than the usual, time that Chinese New Year happens, which happened to fall in line for these delivery numbers and essentially these Chinese numbers for Tesla, that came out not too long ago. So it affected that in a way that, well, it always affects it in this way. It just happened to happen later in, the year, essentially, compared to what it usually happens. So again, the post is right here if you're interested. But that plus technical reasons is why Tesla is dropping a substantial amount, right? 7%. Now, again, keep in mind, it's not just Tesla, right? For the most part, pretty much every EV is dropping substantially today, right? Polestar 8%, Lucid, Rivian, both 4.5%. All the Chinese EVs dropping substantially, like 13% for Li Auto. So it's not like it's literally just Tesla, but just keep that in mind. Thought some context, in my opinion, there is pretty important. But going specifically to Tesla, so there's a few things here. So first and foremost, we obviously broke down the bear flag. Let's talk about the bearish side first, right? Like we talked about bear flags, you have a massive fall, then you have a bit of a bear flag where you're essentially, kind of correcting the crash, if you will. And then again, not always, but like we said, more often than not, you usually crash back down to the downside and continue the downside momentum, right? Now, again, it doesn't mean that it has to, even with this breakdown, this can still be a false breakdown. There is still a possibility for that. Now, obviously, it's not something you should rely on or be hopeful for, but the best case right now, realistically, for the bulls, short-ish term, I can see is a massive run-up back to essentially retesting this breakdown, right? As high as like 198, maybe even as close as to $200. In my opinion, that's the best case scenario to kind of, correct this crash for a little bit, right? That is a possibility. That's like the best case scenario. And if, of course, it decides to recapture 200 and get back into the channel, great. This was a false breakdown. That's very bullish. I personally wouldn't rely on this being a false breakdown, even though it's a possibility, because the chances of it being such are not very high. Excuse me, not very high, but it is a possibility. So again, the way I look at it is this, right? So, if we do play out this bear flag, if we do continue to the downside like this, right, and this bear flag does roughly play out, there's two things that it can happen. One, we can just simply do a double bottom, right? So for instance, we had a massive fall. For instance, here, let me go and draw this here. From here, massive fall here. Then we have a potential double bottom, a W-shaped recovery, which happens something like this. And then off to the moon. That is a possibility. That is a possibility. A bear flag, it doesn't have to replicate the pole once again as like the target. It can, but it doesn't have to be. That's just like a super rough estimate, at least in my eyes and from my experience. So this is a possibility. This right here is a possibility. Will it happen? Nobody knows, but it is a possibility. Now, Let's talk about the more bearish aspect. Let's say we do break below 180. Let's say we even create a lower low. Let's say we lose this low and we start especially closing below 180. What's next? Well, I think that's pretty simple. We come back down to the bottom of this channel to retest that. Now, obviously, it really just depends on when it happens. But let's say it happens towards, slightly second half of March, right? That'll pretty much put us at the very low 170s to the very high 160s. That is a very real possibility to as low as the low 160s. Those are real possibilities, potentially by the end of this month even, right? That is not completely out of the question. So just keep that in mind, right? That is an important thing to understand, that we can easily come back down to this channel to retest that. That is the bearish thesis right now, right? That is what the bears are eyeballing and essentially salivating over, if that makes sense, right? With this bear flag breakdown. So keep that in mind. That is a very real possibility, and it did happen on pretty high volume. Remember how we talked about, as we were like kind of consolidating, the volume kept decreasing, and now today, as we broke down, the volume spikes. That's usually what happens, right? Now again, like we talked about, this didn't have to play out to the downside. It was more likely to, in my opinion, but it didn't have to. This easily could have been to the upside, right? There was a very real possibility of it. Just keep that in mind. This was not a guaranteed move to happen, just a more higher probability, like I talked about a few times, mainly because it's just a bear flag. But again, it was not guaranteed. Anyway, that's kind of the bearish thesis. Now let's talk about the bullish thesis, because there is some hope for bulls here. Not a lot of hope, but there is definitely some hope, at least short term. So there's two things, right? First and foremost, this is the bigger hope for bulls. Potentially longer term, actually. This is like what the bulls really want to defend and what the bears really want to break. So if we take the low over here, right, this low that we had right here, like, what was this, 175? Yeah, about 175. Let me go ahead and move it up ever so slightly, somewhere around here. And we take the Fibonacci from this, the swing low to clearly the swing high, at least, for now. And go to the very, very top of it, roughly around here. What happens? Well, you can see we bounced off of pretty much the exact, almost to perfection, of the 618 Fibonacci level. That is a very important level. This is the level that the bulls really want to defend, in my opinion, and the bears really want to break. If the bears break this level, then the chances of us coming back down to about pretty much roughly 180 on the dot-ish to potentially do a double bottom, very, very likely. And if we break 180, that's when like I said, very likely to come down and make a lower low, essentially, 170s, 160s, something like that. Very real possibility. But as it stands right now, if the bulls can continue defending this 618 Fibonacci level, there is actually still hope. Obviously, that's a lot of work to be done for the bulls here, right? It's a pretty monumental task, in my opinion, but it's not, impossible. So just keep an eye on that. That's, in my opinion, that's pretty important. Essentially, if we break the low of today, anytime this week, it's starting to look less good, I guess, for the bulls. Now, let's talk about what if we do defend this low. Let's say we do defend this low, at least for the very, very short term. The bulls can expect a bit of a, little correction on this massive crash that we had today. For instance, again, you take the Fibonacci, you take it from the recent swing high, and you bring it, assuming this is the, at least temporarily, maybe for the next, few days to this week, swing low to the bottom, and you can see same concept, Fibonacci. We can potentially rise up somewhere around that 0.5 level, which is about the 196-ish level, to as high as, well, that 618 level once again, which is pretty much 198, which I wouldn't be surprised, because this level we treated as a massive support many, many times. So it wouldn't be completely unheard of to come back to retest that area and now turn it most likely into a resistance, and then most likely make our way continuing back down. That is also a possibility. So we are obviously very, very much oversold on the 65-minute chart. You can see, right, the RSI very much oversold. So we are definitely sitting in some pretty oversold conditions on such a massive fall, but those are the main levels I'll be looking at right now. Overall, in my opinion, the bulls have a potential chance here to still defend this and overall make this a bullish case, right? But the bears are definitely more in control, especially after this breakdown. Now, keep in mind, if we do come back down to do a double bottom, or especially if we come down to make a lower low, there's a very high chance we get a nice, beautiful looking bullish divergence on the daily. And I think from there, especially if we do come down to make a lower low, somewhere around the 160s, give or take, of course, maybe even the breach into the 150s barely. It really depends on when it happens. I think a nice low can potentially be set there. And I think from there, we can start looking to really get a nice, push upwards from there. But I do think that, not only will that move to the downside take some time, but even, kind of setting up that low and then finally starting to push up, it'll take a few months from here. I don't think it'll happen like next week, obviously. It can, obviously, who knows? But in theory, it should take a few months, right? To really kind of make that come down, get to that low, kind of base around that low, show some signs of life, and then finally start making that move back up and showing, reversal signs, if you will. It will take some time, absolutely, but it is a possibility. So that's kind of the overall, way I'm looking at this, right? So again, I do think the bears are under control after this move, right? Pretty obviously, but there is still some glimmering hope for the bulls if they can defend that level, essentially the low of today, in my opinion. At the very least, to get a bounce to about that 195 to 198 level throughout this week, at the very least. But if we lose the low of today, tomorrow, let's say, for instance, it's not looking too hot. And I think we'll come down into the 180s level pretty quickly, honestly. And then we'll see from there. And at the very least, I think we'll get a bounce from the 180s level, at least a temporary bounce at the very least, before potentially making our way down even lower. Now, options flow, taking a look at this very quickly. The way I see this is this, right? The two main option flows that I saw was 1.7 million here and 1.3 million here, right? This was a 180 put for 1.3 million premium for... what is that, May 17th, I believe, right? And then we also had another this is 1.3, and we had a 1.7 million put here, 220 put though, so it is very much in the money. Also May 17th. So, there are some whales coming in with some, decently sized puts here for Tesla, right? But again, it's a few months out. They're not expecting Tesla to maybe necessarily crash tomorrow, or at least continue crashing tomorrow, but they do expect the overall trend to continue downwards over the course of the next month or two. That's essentially what these kind of puts are telling me. However, with that being said, the bulls are actually betting on a short-term bounce, a very, very, very short-term bounce. But you can see some nice calls coming in here, 100K premiums, right, all across the board for either the 8th of this month, which is this Friday, or the 15th, which is next Friday. So I see a lot of short-term bullish momentum flowing in recently, at least towards the end of the day, for next week and this week. Again, around 192.5 calls is the main one I'm seeing, to as high as about 195. So that's kind of the main thing I'm seeing, right? The bulls look like they want to look for a short-term rally, or at least a bounce from this area, but the bears are looking for overall continued bleeding, potentially even after that, if not maybe directly from here, right? In the morning, there was also another call that came in, 2.1 million call, 240 call for, July 19th. They bought that at 10:38 a.m. Tesla obviously continued bleeding pretty substantially after that. So they are definitely down on those right here, right now. They bought it way up here. So back when Tesla was still just barely above 190. So they're not happy about that right now, that's for sure. But, they do have time. They do absolutely have time, and we'll see how that plays out for them as well. But all in all, that's kind of the main gist of what I'm seeing. So yeah, let me know what you guys think down below. Ladies and gentlemen, if you enjoyed, of course, as per usual, don't forget to hit that like button. In case you're wondering what I'm doing, I'm just selling cash secured puts. I have some cash secured puts already in the money that I will most likely be buying shares off of. I did buy 100 shares in the morning, obviously a little bit early, because I was hoping we would hold a certain level. We didn't, but I ended up selling covered calls against those shares. And that's pretty much all the shares I own. All I have in my portfolio right now is on my smaller account, I have some Tesla. On my main account, I have, again, the 100 shares I just bought. And I have more cash secured puts. I have the cover call sold against those 100 shares. And I've actually bought Disney as well today on this breakout that I'm obviously holding right now as well. Other than that, I just have cash secured puts, really just getting ready to, continue kind of buying the dip incrementally as we continue, and essentially getting paid to buy the dip. So I'm not complaining about it too much. And of course, if we continue dropping, we'll sell more cash secured puts. But with all that being said and done, thank you so much for watching. And as usual, I'll see you tomorrow. Peace.